Hello there, welcome back to Business AM. My name is Zandura Ganga, standing in for Simba Elijah Charles Kiage. Time now for economic review. And we begin with Safaricom, where Safaricom subscribers increased borrowing from the overdraft services Fuliza in the 6 months to September by a third to 149.4 billion under a coronavirus-induced lockdown that led to layoffs and pay cuts. Fuliza overdrafts rose from 112.2 billion shillings in a similar period a year earlier, indicating a daily borrowing of 830 million shillings. The jump in the uptake of loans emerged in a period when the economy shed more than 2 million jobs in the wake of COVID-19 economic hardships that drove firms into losses. But the use of M-Shwari loans dropped 14.3% to 47.5 billion in an indication that Safaricom and its partners were stringent on issuing loans. Fuliza loans are recovered from M-Pesa automatically, while M-Shwari borrowers may have to be prompt to pay the debt, and this means they can still hold money in the M-Pesa wallet and transact even when they have the loan. The structure of Fuliza relative to M-Shwari makes it ideal in curbing defaults. Now, to help us put some of the stories, including the Safaricom story, into context, we are joined by Reginald Kazutu. He's an economic analyst, and we are also joined by George Munga, who is the managing partner at AMG Kenya. Gentlemen, thank you for making time this morning.
Thank you very much.
Now, what can we say about the culture of borrowing in the country based on the numbers that we've just read right now, showing Kenyans, the uptake of Fuliza in the country was really high? We can start with you, Kazutu.
I think it's an indictment on the economic affairs of the country, not really a culture of borrowing. When people's incomes have not been increasing year on year, and people not even being able to get meaningful employment. As you know, most of our employers, most of the employment is in the informal sector, where most people earn pretty much around the minimum wage mark, which is around 13 to 15,000. So when you see micro loans increasing, and majority of them going to consumption and not actually to running businesses and all. Because if these loans were going to business ventures or investments, then you would feel the impact also in economic growth. But they're literally going to consumption. The danger of that is that we then get into a vicious cycle as a country, as an economy, because the money that I'm going to use to repay this loan is money that could have either gone to saving or could have gone to another meaningful investment. So what debt does is that it reduces the disposable income for ventures that actually increase economic growth or increase your income because you have to repay your loan. And the problem with that is that now we'll go into a more murkier, slower economic growth going forward. So I think the jump or the increase in individual borrowing, especially the micro mobile loans, is just an indictment of that the economy has actually not been growing. And we have failed to lift people out of poverty, and people have to rely now on predatory loans because the percentages on Fuliza, if you annualize them, are ridiculous in terms of the interest rate that are charged on these loans. But people are desperate. So you have to put food on the table. So you Fuliza here, go to branch, go to Tala, go to. So if you look at how branch has lent out, how Tala has lent out, and other mobile loan providers during this period, then you'll see the picture is actually even worse off than what Fuliza is showing by itself.
Great. We'll come to the interest rates and what they mean to the financial bottom line of borrowers in a few. But George, let me come to you. How dire do you think the COVID-19 has left Kenyans? How dire of a financial situation has COVID-19 left Kenyans in?
I think, Noreen, my take is I would want to look at it from both the positive and the negative side.
Go ahead.
If you look at the more developed economies, especially I want to focus on the US. There was the credit card phenomenon that has, I think that is still with them. That most folks in that economy rely so much on credit card to make their day-to-day purchases. I think for Kenya, this is our credit card. Most folks in Kenya were looking for cheap or not cheap credit, but flexible credit. And that is where most of these Shylocks thrived before Safaricom came into the play, and the other mobile phone lenders. So first things first, I think this credit is necessary. That is one, and that is why the uptake is so high. I would want to discount that by now talking about the cost of this credit and the impact of this credit in the economy. If you look at the cost of some of this credit, some of these mobile loans, it's quite high. In fact, it goes to something to the tune of 60-70%, which is not sustainable in an economy. So for me, it is a product that is required in the market, but I think we need to refine it better so that it does not just benefit the companies that offer these loans, but it spurs economic growth. If you are to stop these lendings, Noreen, then you'd go and see Shylocks springing up and filling this gap. So it is a product that is here to stay. We just need to work with some of these providers to ensure that it is a product that can spur economic growth. Remember, most banks were not able to provide this product to the market because most banks would want securities to provide some of these loans. So this is where Safaricom came in and plugged in, and that is why you see the annualized growth of this product is increasing year on year, year in, year out. So for me, I think we just need to address the risk, which again now builds into the costs of some of these mobile loans. But as it is, I think it's a wonderful product. It is something that is not going to go away anytime soon, Noreen. That is my take on that.
Reginald, let me cross over to you. George mentioned something, and I've just done calculation on my phone. Now, M-Shwari gives loan facilities 7.5%. If you annualize that, that's about 90% a year in interest rate. Excuse me. Now, for the borrower who's in a really financially dire situation, say SMEs and the small businesses, mom and bogas, who borrow from these digital platforms to sustain their business, excuse me, what does such a high interest rate mean for their businesses, Reginald? Or what are the dangers of having such high interest rates charged on credit facilities that are looked as emergency or the go-to funds? Because as George has mentioned, banks rarely lend out to SMEs.
The cost of capital becomes very key into running a business. And you don't want to be running a business and your working capital is more expensive than the return that you're going to receive. So for example, if your loan is at a cost of 22-24% per annum, that means the return on whatever you're doing has to be greater than 24% for you to be able to repay your loan. And the cost of the loan is just one part of your loan. You still have your salaries, you still have the high cost of electricity, you still have all the business payments that you have to pay, plus the corruption and kickbacks that you have to pay. That kills business, because then whatever you want to apply that money to needs to be giving you a return which is more than the annualized cost on your interest plus your other costs. Then you come and sit and look at it. What business in Kenya can give you a return of 30%, 32% per annum? If it's clean, that is to say, then you find that it shrivels down or comes to literally next to none. Even Safaricom can't grow by that percentage per year. So the cost of capital is also key to as the access to the capital. So the products are good, as George just said. They've given access to capital, but then the cost is not at a level which makes sense that you can apply that capital, make a return, and still retain some investment in your business so that then you reduce your borrowing. The case that we find ourselves in Kenya is that now we are in a borrowing cycle. Yeah, you borrow to take your business through these 3 months. When those 3 months are done, because whatever you've made is not even enough to pay back your loan, you are again in a continuous and a vicious borrowing cycle. And that's where I come and I say, it is very easy to regulate the borrowing and not treat the root problem. This over borrowing that we are seeing, especially for consumption, I wish it was going for business and investment. Then we would have felt it in the country. You will have seen it in Kenya National Bureau of Statistics numbers. We will have seen it in the tax revenue. So if you look at the amount that is being borrowed and the growth that is coming with it, there is a disproportionate effect there. Debt is growing by more than 70, 100% in terms of the amount that is being borrowed. But you see the economy, even in those sectors, is not growing by more than 3, 4, 5%. And that also goes on the national level. If you look at the amount of borrowing that the government does vis-a-vis the income that is generated from it, then you realize that this money is actually not going to something that generates return, it's actually going to consumption. And when you start going to consumption, when your income is not increasing, you are setting up yourself for crisis. So George mentioned credit cards in the US. It will be a very tricky comparison. If you look at their GDP per capita, if you then look at also their annual growth in income, you realize they can get the credit card. They will be able to repay the credit card for them to be able to borrow more. And there's a lot of vetting that goes to being able to get a credit card and actually use a credit card. Mm-hmm. So if we make that comparison of that the US uses credit cards, so we're also supposed to use our micro loans, but then we are not comparing the income capacity of the individuals who are borrowing, then we are just setting up ourselves for a bigger disaster in the future, because debt will always reduce consumption going forward. And if these are the majority of the people who are supposed to drive aggregate demand in the economy, when they start failing to pay the debt, when they start apportioning a greater part of their income to paying debt, then you have individuals and corporates who are now in a debt trap, because the income that is coming has to repay debt. For them to have working capital to go forward, they have to borrow again. If I'm an individual, I borrowed at the beginning of the month, I bought food stuff, knowing that my salary or something is going to come at the end of the month. When that comes, you realize 20 to 30% of it has to go repaying a loan. So I'm automatically in a vicious borrowing cycle, and you realize the national saving figure does not go up. And without saving, then you still end up in the same problem where you will not have cheap capital. Mm-hmm. If we can increase the pool of capital, then it's very easy to start seeing rates coming down when liquidity starts increasing in the economy. Mm-hmm.
Great. George, I want us to pick up where Kazuto has left, and he's mentioned credit cards and how it works in the United States of America. I want us to do a differential diagnosis. We don't have credit cards here, or if we have, then it's for the up market, most likely. Right. So these digital loans are what are left for the ordinary Kenyans or those in the middle and lower financial bracket. How do we ensure it works for them just the way credit cards work in America? Because as Kazuto has mentioned, most of our borrowing is not even for investment in business, it's consumption. And the easiest way to get into debt stress is to consume money that you're not able to pay back.
I think, Noreen, some of these products are products that are put together to respond to a market demand at a particular given time. Noreen, today, if you went to your bank and requested for a loan of 5,000 to go and make a purchase maybe on the street, I'd bet that you not get that loan at that point that you need it. So that is where Safaricom comes in, and I want to credit Safaricom for their innovativeness and their flexibility. This was a product that was that the market demanded. In fact, it was the market that demanded for this product, not the other way around. When we had M-Shwari demanded that you make some savings and you make some transactions before you can qualify for a given amount of facility. That was not very successful, though it was successful to a certain percentage, but not very successful as Fuliza has been successful. So you must give credit to the developers of this product. How the market responds tells you that this was a product that was market driven. As Kazuto has put it, most of these loans go towards consumerism, not necessarily for investment, and that is where the problem starts. You pick this money to go and buy groceries, to go and buy clothing, to go and have dinner probably, or for entertainment. That does now plug back to the development of the economy. So if you look at it from that perspective, then you realize that Safaricom has a challenge because they operate an ecosystem. If I lend to you today, and you're not able to pay me back at the end of the month because you don't have that money, then it is me who will suffer at the end of the day. So the onus is on Safaricom to ensure that this product, as it is put out today, is sustainable in the near future, in 3, 4, 5 years to come. But I bet you not, Noreen, that is a product that the market demands. I think we need to address 2 factors, Noreen, before I leave you.
Go ahead.
Is the cost of this product, which is very important. I would want to see it at a cap of maybe 30% per annum. That is 3% per month. That would be reasonable. And then the amount that is lent to you, if they could lend to people maybe 20, 30,000, then that can go towards investments or towards business. But the lending amounts of 2, 3, 4,000 goes purely to consumerism, Noreen. That is my thought on that.
Mm-hmm. Kazutu, let me come to you as we wind up on this Safaricom issue. Safaricom, together with NCBA in August, raised the minimum loan size on mobile lending platform M-Shwari 4 times to 2,000 in a move expected to reduce defaults largely by borrowers in smaller amounts. This speaks to a problem of default. Now, Fuliza works because the moment anybody sends you any money, whatever money it is in any form, they will be able to repay back the money that you borrowed. But other facilities are beginning to feel the dent and the struggle of defaults. What does this mean in the design and strategy of these products and giving out short-term credit facilities in the near future or going forward?
It's definitely going to be a worry, and I think NCBA in their last results came out and said yes, the default rate or the provisioning rate for the M-Shwari had to increase because the defaults were increasing because of COVID, and how the informal sector was affected by that. And if you look at it, even currently, even for Fuliza, I'm sure many times you've tried to send someone M-Pesa and they've told you, don't send it to this number. There is Fuliza. Sent to this M-Pesa. So people have found a way around it. And that's the moral hazard of giving unsecured loans. And it's a risk that the financial institution, in this case also Safaricom, have to bear in mind that if a person defaults, you have no recourse whatsoever. And these people are people who are saying, it's 5,000, it's okay, I'll borrow from branch. And that way now CRB comes in. So people have taken advantage of the period where there was no listing in CRB. And many people defaulted, and that's why you find the default rate in M-Shwari went up. It never used to be that high. It went up. Most people know, I won't be listed in CRB. That means I can still be able to borrow from other platforms, even if I default. Then I'll sort out myself when the listing of CRB starts coming back. And the interesting thing that is not retrospective. It was from October going forward, so it's not retrospective to what was happening behind. So it's some of those mechanisms that need to start being put in place, where even these mobile loans, before they give them out, you realize even Fuliza themselves, we start having to do some background checks in terms of CRB, maybe your M-Pesa transaction movements and all, because to just blatantly give out 4,000, and as you've noted, it's 800 million a day. They cannot afford to even take 50% of that loss in a day, both NCBA or even Safaricom. Because most of this time it's bank doesn't lend out its own money. They get from John and hope John doesn't come for it tomorrow. Then they can lend out to Peter and hope Peter pays back before John asks for his money. So I think credit difference bureaus will come into place to try and just put a check on the default level, or put some fear in people that if you default, you won't be able to borrow again, and put some sort of discipline going forward. Other than that, it's a risk they have to take. When you lend to me with no security, if I default, it's actually the bank that is in problems and not the individual.
Mm-hmm. Thank you, Kazutu, for that. Now, hear this. Kenya Power posts first loss in 17 years. And also, wealthy Kenyans are blocking KRA from tax collection. This and much more on the other side of the shop breather that we want to take. Stay with Metropole TV.